Okay. Alright, welcome back to the stream. Literally just hopped on the chart, so I haven't really done too much analysis so far, so it's like we're bearish. So we're sitting inside a 1 hour fair value gap off the jump. That's the first thing I see. So we'll see if this closes. Probably won't. We've got a minute left on this 1 hour. But if we are bearish, I want to see that close below at some point. But we're going for these two lows today. Looks like. Got some slight LRLR above as well. So we'll see what we're going. Yeah, the market is moving sideways recently, to be fair. It has been moving sideways. Especially in the last, this week, really. This week, spanning back to, Wednesday, after PMI hit. We've just kind of been moving sideways, which is fine. It's only a matter of time before the price action clears up. But, yeah, it hasn't been the best recently, to be honest, but that's okay. But yeah, it seems to me as if we're bearish for today. I like the look at this LRLR above. However, I do feel like that isn't going to get taken first. I don't think that's really a target for me today. I think it's just this sell side liquidity that I'm going to be targeting. So this low and then this low. And of course, you've still got quite a bit of imbalance below. So we still got quite a bit of imbalance. So it probably is, the case that we're probably going to run down into that 4 hour fair value gap a bit more. There is also untapped imbalance below, even further down than that. So we might actually be, in the next week, we might be balancing the market, we might be running down. But we'll see. We'll see what happens. But really right now I want to see this hourly get closed, which I believe it will. And then so we just got a rejection from this 15-minute fair value gap. A retrace and a close, I would not even enter that. But you can see this is a massive momentum imbalance, so we're clearly just filling it at the moment. So I was looking at this trade earlier where as soon as I hopped on the charts, I kind of just saw this inverse. So we're delivering from 15 minutes, so it would be alright. And then obviously I feel like this would be what we target. It's actually a decent trade. just something like this. But literally, I wasn't on the market at that time, so. That honestly would have been pretty good, mate. Break even here. Probably take partials like once, like at these highs or something. It's not worth taking partials at that fair value gap, to be honest. Yeah, but off the jump, that would have been a nice trade to start off the day. So yeah, 27 minutes till market open. We're looking for stuff to happen today. So yeah, I'm bearish today, so I'm not going to be taking any longs. Even though we are, I'd say, like low enough for longs. We are kind of, we did just sweep this low. And we are technically in a 15-minute like momentum imbalance. So an inverse here to maybe take us up. I believe we have some equal highs above, which is nice. So this might be a trade we take. But we are kind of delivering from this 15 minutes. So I expect us to come and close below that low. So I'm not sure, honestly, with this one. Yeah, we are in discount. Kind of, yeah. So a long is definitely like doable here, but just not sure how I feel about it. It'd have to be a really nice inverse for me to take this. Like, it'd have to be great. No chop at all. It'd have to be like A plus for me. Oh, I never even screenshot this. Yeah, there we go. I'm happy we didn't get that because honestly, that would have been such a hard trade to take. Like, because it would have been against my bias. So it would have been very hard for me to take. Well, now it feels like it's gonna close. Just gotta wait for that to close, really. But yeah, definitely bearish, targeting these lows for the day. And we're sitting inside a 15-minute volume imbalance, momentum imbalance. So yeah, happy we didn't get this set up, because yeah, it really would have looked like an A plus in the discount. Good momentum close, liquidity sweep off of that wick. But we didn't get it, which is good. I wanted to just take sells for now, shorts. But yeah, now my outlook for the day really just looks like this. But because of how much imbalance is below, if we go into the 4-hour, we still have quite a lot of imbalance to fill. So for now, it's really just like this. But we'll see what happens. I think today's one of those days where you take sales based off more or less the bias on the 1 minute. So yeah, you can see we've just been moving sideways as of late, so it's nice to see a bit of movement in the market. We still have these equal highs above, which we need to keep an eye on. So you've got a 3-minute gap forming. So any inverse from here on out would technically be allowed. You're not seeing a liquidity sweep, but you're seeing a delivery, because we're actually constantly delivering from this 15 minutes. So we're sitting inside this 15-minute fair value gap. As you can see, it is really, really large 15-minute. Right, we're actually sitting inside of it, meaning if we deliver up from here, so if we inverse like this, technically we're delivering from this 15 minutes. So depending on how good the entry model actually is, we can enter it. Or I'm okay with entering it. Depending on how good the entry model is, I'd be okay entering something like that. But it's all subjective and situational. So like at the moment, it'd have to be like a V-shaped recovery setup rather than any old inverse for me to allow it, just because we're delivering from a higher time frame fair value gap, not just a like clear as day fair value gap, if you know what I mean. But yeah, we're actually starting to see movement now. We've got market open in around 18 minutes. so we'll watch the 3 minute now for a bit just to see if this inverses. Like if we got a direct move up, I'd probably paper trade that, to be honest. But we look pretty set on reaching for these lows. 100%. A lot of people will call these data lows, but they're actually not. A data low would be like this, so a candle formed during news or like a high impact news candle. However, the wick would need to be like a lot larger. It'd need to be like this long, so like this, right? These are data highs here. You see how long this wick is, and it was a candle formed during news, I believe, or some sort of like news event or something. You'd call those news candles. And that will pretty much be a very, very large draw on liquidity. A very big pool of liquidity, 100%. Like, price will always trade up towards that. To be honest, I'm very surprised that we didn't actually take that beforehand. Very surprised. But yeah, you can clearly see what we're going through. We're going for this imbalance here. We need to fill that out. So that, to be fair, actually reinforces my thinking of something like this, because as much as we do have this 4-hour imbalance that we still haven't filled yet, we do have these data highs above, right? We could come up, take that, and then maybe come back down. But again, I don't know. We'll see. We'll see. It is one of those days where we actually are kind of just paying more attention on the lower time frames on a day where the higher time frames can't really, for me, determine bias to the full. So again, this week has been a week of just watching price action a lot. There's been a couple trades, but realistically it's been quite a dry week, quite a slow week, which is okay. Like, slow weeks are good because you're not losing any money. Do you know what I mean? The weeks where you're just getting set up after set up after set up are the weeks, they're just as hard as slow weeks, in my opinion. Because on, fast weeks where you're getting set up after set up, some of those setups will kind of misinform you. Setups that you shouldn't really take, or you'll miss a really, really good setup and feel like you have to take the next setup, but the next setup wouldn't be as good. But yeah, you can see we actually are looking like we're going to try to inverse this 3 minutes. So this might be a paper trade, because I want a more like distinguished liquidity sweep rather than just delivering from a 15-minute. I know we are far enough into discount when we take into account this price leg and this price leg here. So we actually are far into discount, but again, I've told you my bias already today, so this is probably going to be a paper trade. I'm going to duplicate this tab just so I can watch it on two different, and I'm going to send it to my TraderVate account. There we go. Yeah, so this is definitely going to be a 3-minute entry, but definitely a paper trade just because of my bias, and it will target those equal highs. That's the only reason why this is even a paper trade. It's because of those equal highs above. It's looking pretty nice. But again, we gotta wait for it to close first, of course. Alright, cool. I'm gonna place our buy stop. There we go. Alright. So this is the paper trade that we're in. Up to those equal highs, just because see how that plays out. Again, wouldn't really take this on a live account, and I'm not taking this on my live account purely because I genuinely do feel like we're just coming to fill this imbalance. Even if we do get a retracement up a little bit, I feel like we'll reject off this 15-minute, or even if we do take these equal highs, I just think the drawn liquidity is too strong in the form of those two lows, so I'm not confident taking that trade. Not confident at all. But it looks nice. Like, I'll be honest, it looks nice. In theory, don't usually take trades on the 3-minute anyway, but in theory it looks nice. Also, those equal highs are on the 1 minute, by the way, in case you didn't see. But the trade isn't actually on the 1 minute, it's only on the 3-minute. So the most valid are like 30-second time frame, 1 minute, and 2 minute. 5-minute also is pretty nice, but yeah, I guess they all show the same thing. I always use the analogy, like the higher time frame is just like a lower resolution TV compared to like the lower time frame, which is the same exact thing. You're seeing the same thing, but just at a higher resolution. That's how I always like to talk about price in terms of different time frames and stuff. 10 minutes towards market open as well. Another reason why I wouldn't get in this trade. It's just not enough time to really commit and have conviction in the trade. Market open will provide all sorts of like volatility in the markets, enough to change the course of a whole day, because we usually, we like to run liquidity during market open as well. So we always got to be careful. I never actually had a look at these sessions. So London low, New York high from yesterday was taken, and yeah, that is New York low. Yeah, that's what I thought. So yeah, and then we've got Sydney low, which we don't really talk about. But yeah, London/New York low, which is important, so I'm probably going to mark that out. So yeah, that's an even bigger reason why I wouldn't enter this trade. This is literally London lows. Technically it is New York low as well, but okay, it's looking like we'll close this trade. Yeah, we actually have to close it. Okay, it already closed automatically. Yeah, there we go. So yeah, that trade was an hour. I never had conviction in it anyway. We actually have like a bearish kind of trade here, but it doesn't really show itself on any other time frame other than the 1 minute. It probably would have been a 30-second entry, but because we're not really getting these equal lows, yeah, they are. We're not really getting much. We closed this fair value gap, but then we immediately entered into another one, so it's not a better trade. So yeah, if you look closely, you've got another inverse here, but this is way too small. This fair value gap is way too small to even think about, so I don't want to hit none of that. It needs to be an obvious fair value gap where if you stood 10 feet away from your monitor, would you be able to see it? I definitely would not be able to see that, therefore it is not valid. Just one of those things. Definitely not valid. One reason why this is like horrible is because you entering a trade like this will 100% get you stopped out, because you'd have to put your stop loss below this fair value gap. It can easily reclose. The entry model is if it closes below that fair value gap again, then you gotta close the trade. That's just how risk management works. This looks really nice though. I'll be honest. This looks like very nice. Swept liquidity, delivery from fair value gap. I think we have to be in this one. I think we gotta get in this one. In my opinion, this looks very nice. Yeah, we've got a delivery. We're probably not going to get the close now, which we won't. But this looks great in my opinion. I know we're in discount, which is not good, but again, my bias is definitely these London lows, 100%. And then of course this like minor sell side. So we'll see if we get that. And also these are equal lows as well. Yeah, now this is definitely a trade that I'll take because of these equal lows below. I don't think I'd regret this trade. The only reason why I feel like I'd regret it is because we're too far into discount. So it's one of those ones. And I wouldn't mind sweeping liquidity again, right? Sweep it once, sweep it twice. Yeah, I wouldn't mind sweeping liquidity again. However, this is going to be a very difficult trade to enter now, right? Because if we go ahead and close, if we take this high before we close, I can't enter it because that is now protected low. So if we take this low out before we close that fair value gap, which I can't lie, we probably will, then it's a trade that we can't really take anymore because we would have taken some sort of liquidity. Also, 4 minutes away from market open. Yeah, we're going to stay out of this. It's also chopping a bit. This is definitely not what you want to see. This is called anticipatory. Actually, I don't know what I used to call it, but this is like in anticipation for market open. So a lot of the times, 5 minutes, 10 minutes before market open, you'll see a bit of chop. We saw it here, and then we saw it here. It's just not what you want to see. You're not going to have any real conviction going into a trade with that chop because it's just pretty much telling you, leave me alone, don't touch me, otherwise you're going to get fucked up. Like, it's so funny. Like, I've seen people enter trades when we've like just been chopping. Like, wait, let me even bring up like a example, because there was an example recently of like the worst possible price action. Yeah, like this. Like, look how horrible, like look how shocking this price action is. Like, it's actually shocking how people would enter trades in this. Like, these wicks are just so much bigger than the candles. There's no real movement. It's just horrible. And people will enter the trades here and be like, why the fuck am I getting stopped out? And it's just, bro, leave me alone. Don't even talk to me, bro. So what do we do, right? This is a great scenario. I like this scenario a lot. Whenever there's two large pools of liquidity in either direction, let's pretend that we're not 2 minutes away from market open. In this case, it's equal highs above and equal lows below. Whenever there's equal lows below and equal highs above, or just two very large liquidity pools on either side of the market, just wait. Just wait for one of those sides to be taken out, and then typically you can use that as a confluence to trade in the other direction. Just fucking wait. That's all you got to do is just wait. This is a paper trade though, realistically it is. I may as well take it on paper, right? Or no, what do you guys think? Yeah, no, I may as well take it on paper. That's if we close it. Or are we just going to go down and destroy the equal lows? Listen, if you're someone that can't resist not getting into trades, just open a paper trading account and just trade away, bro. Like, just stay away. Always have your, I don't know, either your evaluation account or your live account. Just have them on different tabs. If you're someone that can't resist like entering trades, like this trade for example, like originally it looked good, but now it's chopped a bit. We're 2 minutes away from market open. If you're someone that just can't stop yourself from trading, bro, just go on paper trade, bro. You know what I mean? Like, this isn't even worth paper trading. But the reason this became invalid, one, because we're almost market open. Two, because we've taken this protected low just before we've closed it. So the fact that we've taken the protected low changes our confidence for the whole, for the whole trade. So it's not really valid anymore. And also this choppy price action. Having choppy price action like this is just like I just mentioned, it's horrible. If you even think about entering a trade, what is wrong with you? It doesn't make sense. It's like the market telling you don't trade. But yeah, 20 seconds away from market open. This will probably run liquidity, waiting for these equal lows to get taken. But in all fairness, the actual targets for today are just these London lows, and then obviously this minor sell side liquidity as well. That is the outlook of today, and we're also waiting for this 1 hour fair value gap to get closed as well to signify a bearish price action, because that's exactly what we're waiting for. Alright, there we go. Let's see what market open looks like. Yeah, cool. So we run the equal lows, and we've taken these lows as well. So yeah, definitely bearish today. Still filling that 15-minute fair value gap. But no, genuinely, I've seen people enter trades in price action like this. Like, you can just see the wicks compared to the candles. It's disgusting price action. And people don't understand why their trades won't work. You have to listen to the market. When the market is telling you not to trade, don't trade. If you want to trade, open a paper trading account and do that. Because you will get wrecked every single time. You will get destroyed. And see guys, so this is a great example as to why you don't trade in anticipation for market open, or even like during market open. I've seen people enter trades with 5 seconds to go until market open. So you see how we dumped like, how many, I don't even know how much we dumped. We dumped around like 30 points, and then immediately traded back up into that. Like, that shit is crazy. And that's what market open brings. You see, we swept those equal lows, we swept these lows. So we took liquidity, like I said, market open, we usually run liquidity, and we immediately reversed, went straight back up, and now we're bullish. And it's like, you really want to trade that? You don't want to trade in those conditions. If the conditions ain't right to trade in, don't do it. Like, that is untradeable. That is the definition of untradeable. So it's just a case of waiting it out. Being a trader is not, it's not always fun. You know, you gotta wait, you gotta be patient in these moments. Yeah, you can see we're pretty much filled this whole imbalance. This whole 50-minute imbalance has probably been filled now. You can see there's a little bit at the end, but to me that doesn't really matter. I expect to close that anyway. It's just this 1 hour that I just want to see get closed, which we still have 25 minutes on this candle, so anything can really happen. We can still reject that bit of imbalance above as well. So yeah, still conditions aren't really good. We're not really seeing anything. To be honest, I'm just waiting for some like what's the word? Just some volume in the market. Right now we haven't really got much volume in the market, which is fine. Still got these equal highs above. Whether or not we take that, I'm not too sure, but I think we just dump, honestly, from here. But I'll be honest, like, it doesn't matter. Whatever your outlook is on the market, it actually doesn't matter. Like, obviously, it's better to be right than wrong, but I'll be honest, like, if you're someone that gets your daily bias wrong, right? But you've got the technicals down to a T. You understand your strategy, and you've done, you've had screen time. You've back tested for hours and hours, thousands of hours. It's actually okay because, for example, right? If I think I'm bearish, and we start moving bullish, and we get trades, like, just because I'm bearish doesn't mean I've pressed sell like for the whole day. You know what I'm trying to say? It doesn't actually matter. It's when we get this setup. It's when we get that one setup per day. Right, whatever we do with that, the risk management, the entry, the execute model, like, that's what really matters about like whether you win money, right? Having a good outlook on the day is the main thing. Bro, I don't know what the fuck that was. It's got like a fire alarm or something. But yeah, realistically, I'm just gonna wait, see what happens. We'll wait for a setup. We'll wait for one of the things. But yeah, it's always one setup a day. It's never, you know, you whatever we enter. If that's a loss or a win, we're done for the day. It's literally you sit on the markets, you wait. We're scalpers to an extent, but also we're not the scalper because we don't play into the culture that you just enter trades everywhere and anywhere based off like an order block, fair value gap, high, low, fucking, you know, fib retracement. Like we don't, or like, you know, even OTEs, optimal trade entry. Like we don't just do that. 2022 models. Like we don't just scalp in that manner. We're scalping because we're taking trades on a 1 minute, but also we're just waiting for one setup that we look for and that one setup that we've studied our whole life, and that's exactly what we're looking for. I want to break this range as well. Like I want to break this range. I want to see like you know, I want to see something more. I want to see more volume in the market. Maybe take these equal highs. Now that I think about it, like I wouldn't mind taking those and then taking out London low. Okay, so for me, if we entered this, or if we invest this fair value gap, there would be a couple of reasons why I wouldn't take it. I know I'm saying I wouldn't take this, I wouldn't take that, but again, these are just the things you got to follow your rules. Like this is the only reason why you'll be profitable. Like if I enter this trade, I'll be going against all the rules. So let's say we do end up closing this. Well, what are the things that goes against my rules? Well, there's a couple things really. One, we're in discount. In my opinion, I know, like I said, because of my bias, I would be okay to ignore that because there's a couple ways you can look at it. One, you could look at this price leg and say, am I in discount? No, I'm actually in premium. However, you could also look at this price leg. You see, am I in discount or am I in premium? You can see we are in discount, but it's not, it's kind of like just below the 50%. So we could take that. But when we look at something like this, for example, like this price leg, we're clearly far into discount. So it's just the way you look at it. However, going past that, if we do end up investing this anyway, Another thing is these equal highs, the ones that look like we're about to take, which is fine, which is great, which is what I really wanted to see. These equal highs are very important because price is very much drawn to it. So if we enter down here and price ends up reversing to hit those equal highs, I'd be an idiot because that's something that I would never do usually. So yeah, we're gonna hopefully watch now and go see price take out these equal highs. That's exactly what I want to see. Hopefully this inverses, and it has. So if this fair value gap was further down here like this would be a great entry. If the fair value gap was down there and we entered off this, that would be an amazing fair value gap. Amazing entry. Technically we did have one here, but that was during the chop. So you can see we was chopping quite a lot. Market open just finished, but if it wasn't chopping and we closed it like this and we kind of consolidated down here, this is definitely a long that I would take because it's a clear target. Those equal highs, I feel like it was never going to get left behind. It's like a 1 to 3, like it would have been a great trade. Even something like this is paper tradable, like this close here, this is something that we could paper trade. I'm not going to just because, but it's definitely something we could paper trade. Just ride it up to those equal highs. This is even a live account trade, honestly. But the risk to reward just isn't enough in my opinion. Like I guess we could enter it and then take partials at the equal highs, maybe actually. That could be a shout, and maybe even target these. But it actually has to close first, you know. Which, surprisingly enough, it looks like we are trying to go back and inverse this. Which, bro, this is so annoying because it would be nice to enter a trade like that, or it would be nice to enter that particular trade, but I just don't think we're going to do that. We're not going to do it before we close that, or before we touch those equal highs. So it might actually be a chance here. I think I might. I really do think I might get in this, if you ask me. And try right up to those highs, which I doubt we will, but like, yeah, no, price is moving a bit choppy, I don't know. Yeah, no, it's actually moving quite choppy. I'm going to leave it. See, have a look what the Discord is saying. I like SMT at 850 macro high. We'll have to take 930 first. 2 minute short potential. So what I'm doing here is I'm looking for an SMT. If you don't know what SMT is, I'll have a video talking about it. It's called it's divergence. It's basically the correlated pair of NQ is ES, which is the S&P futures, S&P 500, and basically any divergence between the two pairs, sorry, not even two pairs, two indices, could basically tell us something about price action. So for example, if we go on the, are we on the 2 minute? Is this the 2 minute? No. So if we go on the 2 minute here, if we look at this high, if we take this high on the NQ but not on ES, it could tell us that we're actually forming a bearish SMT. And yeah, no, this is horrible. This is really strange price action, if you ask me. here, for example, so we actually had an SMT here. So you can see from this low to this low, we had taken it. So this is called an SMT, right? Because we took the low on ES, but just not on NQ. So because we took it on ES, it could tell us like before we even take this low, we might actually like reverse up. So I can draw on both sides. That's an SMT. But it's deeper than that. I'm not really gonna go into depth. But yeah, for example, we literally just now on NQ we've taken out this low. I know it's a bit too early to tell, but at the moment we've got an SMT divergence, right, with that low, and then with these lows, like this is an SMT divergence. You understand? So this could tell us, yeah, we've taken liquidity, and we also have a 1 minute fair value gap up here, which I do like the look of, since we've broken out of that like slight consolidation. I just want to touch those wires, honestly. And then we're just looking to see if ES does end up taking that. Yeah, you got a really strange price action. I might just have to watch it for the rest of the day, I'm sure. Yeah, these guys have the exact same idea as me. SMT, protected high. But yeah, exactly what I said to this guy. We are moving sideways. I wouldn't take anything in this range. Yeah, he's right. However, we can take up to this high and just go break even, take partial, so that would be alright because it's a good draw on liquidity, and we'd be able to go risk free from there. So purely because of those equal highs. So I might actually jump into this trade. And I'm gonna put a sell limit there just because I can't really, because I only put one contract in, I can't really like change whether or not we're able to. You can't take partials, etc. So once we get here, once we get to this point, this is gonna be our break even point. Alright, cool. Close the trade there just because we've taken these equal highs. I mean these protected highs. Probably gonna go out. Yeah, there we go. Perfect. Alright, cool. So that's our trade of the day then. We actually made out the day without taking the city trade with all this choppy price action. I'm gonna put on the execution so we can see what we did there. We entered there, we exited there. I think we entered actually a bit lower, like here. There we go. So it's a 1-to-1. In my opinion, it's pretty decent. We saw the inverse. You had an SMT below. 1 minute inverse, you can see there. It was actually, I think it was a 2 minute. No, it was a 1 minute inverse. And then we had our equal highs above, which is where we traded it to. So pretty good trade. Happy with it. Them equal highs kind of got in the way. I think we closed it a bit early. But that means we're done for the day. Successful on a day where we didn't have to trade for that long. Like this could have been a day where we stayed and just traded for hours because of like no opportunities arising. But yeah, no, we were able to find one in the midst of all that horrible price action, which is good. So yeah, that's the trade. I'll do a trade review on the Telegram, but it's pretty simple. Liquidity sweep. We had the IFEG closed above, entered off the close, targeted those equal highs, which we were literally targeting for forever really. But yeah, like I said, equal highs are a really large pool of liquidity, so we always, pretty much always go and take them out. Whether or not we trade all the way up until these is, I'm not too sure, especially because I did think at the start of the day we'd go take London low. We might retrace into this imbalance and come down, but that might not be till way later. So yeah, that's the trade for today, and I'm gonna be done streaming. Just a short stream then, clearly not a very long one. Actually, you know what, we've been streaming for an hour actually, so streams are usually like an hour long anyway. So yeah, peace out, have a good one, and